Paul, how did the Australian public M&A market perform in FY15?
Well, in last year's report, so for FY14, we saw a real uptick in activity, and we were expecting that to continue into FY15. When we looked at the data, that didn't materialise. There were, in FY15, 55 deals throughout the course of the year, down from 77 in the previous financial year. That was an all-time low in the 7 years that we've kept the report. However, deal value was still quite solid at $28 billion. That was helped along by a number of mega deals, being deals valuing the target at more than $1 billion. There were a number of those that accounted for around 80% of overall deal value. In the mega deal space, we saw a preference for schemes of arrangement as opposed to takeover bids, showing companies involved in those transactions favouring certainty in what was a volatile environment. As you would expect with the lower deal volumes, we also saw lower levels of competition, and this year there were in fact only 2 competitive scenarios in the data that we analysed. That translated into success rates, and overall success rates were at 70%, which is relatively high, and for friendly deals they were at almost 90%, which is very high. This year we saw an increase in the proportion of premia in the 20 to 40% range, and a decrease in the proportion of premia in the above 40% range. There also appeared to be, for target shareholders, a preference for cash, with the success rates for transactions that were all cash being at all-time highs, and the success rates for transactions that were all scrip at all-time lows. So overall, although for FY15, Australia, although it did have quite a different experience to the international M&A markets, which during that period were had very high activity levels, there were in Australia a number of strategically important transactions, and that shows, I think, that the foundations of Australian M&A remain relatively strong.
And how do you think M&A activity levels will fare in the current financial year?
FY15 was a year of 2 halves, I think. The first half of the year was relatively lean, and in the second half of the year we saw a real uptick in activity with all of the mega deals announced in that period, and around 85% of deal value transacted in that period. That has continued into the start of FY16, with some very significant deals announced already in the first quarter. In just the first couple of months, we've already seen a larger number of competitive scenarios than we saw in the whole of FY15, and that indicates there may be a shift in momentum, with market participants prepared to move now despite the volatility that we've seen over the last year or so. At a macroeconomic level, the Australian dollar has depreciated substantially, increasing the purchasing power of foreign buyers. Markets are relatively low, and I think combining those factors means there are buying opportunities. We're also seeing, as the low price environment continues for a period, I think we will see a realignment of buyer and seller price expectations, and that will drive further M&A activity. So I expect for FY16 the increased level of activity we saw in the last half of FY15 that has continued into the start of FY16 to continue, so it will be a stronger year this year for Australian M&A.
Paul, thank you very much for your time today.